Good morning, folks. This is Billy Trout. I'm the manager of taxpayer education for the Tennessee Department of Revenue, and I'd like to welcome you to today's presentation on franchise and excise tax basics in Tennessee. I'm privileged to have two members of our staff with us here today that will be doing most of the presentation. Miss Katie Julian in our taxpayer education office, as well as Danetta Dean, who is a manager in the franchise and excise tax area. So we're very glad to have you with us today. We want to call to your attention the information on the slide that you're seeing here as far as being able to connect and ways that you can troubleshoot your situation if you're having some difficulties today. And certainly as a reminder, today's presentation is being recorded and we will have that posted online as well as a PDF of the PowerPoint slides that we'll be presenting today too. So you can go back and refer to that later on if you'd like. So as we begin this whole thing, let's go ahead and kind of set the stage just a little bit and kind of tell you that today's presentation is on franchise and excise tax basics, okay? So franchise and excise tax has a lot of moving pieces to it, a lot of intricate things that we will not discuss today. This is some very basic information, and that's exactly what Katie will be going through here in just a moment. So as we begin with that, Katie, I'll go ahead and throw it your way, and we can go ahead and go through the presentation, and we'll have a discussion about some of your questions afterwards. Thank you very much.
Thank you, Billy, and thanks to Danetta for joining us today. We'll be talking with her and chatting with some of your questions here in just a little while when I finish giving the PowerPoint presentation. But like Billy said, we're just going to be touching on a few basic things about franchise and excise tax today, specifically minimum filing, extensions, and estimated payments. I wanted to really quickly, before we get going, because you may have a ton of other questions, and in case I forget to show you later, I'm going to share my web browser and just show you some great place for finding resources about the vast amount of franchise and excise information that we have on our website. So this is tn.gov/revenue. And first off, if you scroll down a little bit and click on taxpayer education, that's probably how you found the registration link to register for today's webinar. Under tax webinars, if you look down here under webinar video library, that's also where you'll find the recording for today's webinar and our past webinars. Under franchise and excise tax, you'll see here we have quite a few webinars that we've done on this topic, pretty specific topics here about F&E tax that you can access. Another great place on our website, see here to find franchise and excise tax information is under taxpayer workshops. You click on franchise and excise tax workshop. You'll see another workshop there, and one more place, because I don't want to spend too much time doing this before getting into our webinar today. Under tax resources, you can get to that from the tiles on the front page or these headings up at the top of our web page. If you click on tax manuals, you will see lots of different tax manuals here. To access the F&E tax manual, you click right here. Pretty exhaustive resource here about all of our franchise and excise topics. So let's see here, get back over to the PowerPoint. All right, so today's webinar, as I said, we're going to be focusing on these three main topics about F&E tax. Some basics about F&E, who's liable, due dates, delinquencies, how to close your account, and of course, minimum return filing, the applicability of that, how to file and pay minimum returns, estimated payments, who is liable, how to compute estimated payments, and remitting, and some information about delinquent estimated payments, extensions, how and when to file, and some resources, where to go to find information. Actually, I just showed you that. Our Department of Revenue contact information, and then of course we'll have a chat and Q&A session with your questions. And Ms. Danetta Dean, who is our manager of F&E, to give us some information, more information about today's topics. I do want to mention one more thing also. When you put in your questions into the chat, make sure you direct those to all panelists. That way we can, Billy and Dan and Danetta and I can all see your questions. All right, here, just a basic overview of what franchise excise tax is. It's a combination of two different taxes. Franchise tax is the greater of net worth or the book value of real or tangible personal property owned or used in Tennessee. And excise tax is net earnings or income for the tax year. This tax follows pretty closely to your federal tax return. Who is liable for F&E tax? All for-profit, foreign, and domestic entities chartered, qualified, or registered in Tennessee or doing business in Tennessee must file the franchise excise tax return and pay at least the minimum tax, which we'll get into here in just a bit. This includes corporations, limited partnerships, LLCs, and business trusts. And important to note here that entities are subject to F&E tax from their date of formation. Entities not registered with the Tennessee Secretary of State will be liable for the tax from the day they begin operations with substantial nexus in the state. So there's some confusion there. Some people, some entities think that they just have to file F&E based on when they actually charter with the Secretary of State, but it's based on the date of formation. So a timeline here, a basic timeline about franchise and excise due dates. If you look at the very beginning of this timeline, it does assume that the entity has a fiscal year end of 12/31, so a calendar fiscal year end. Of course, if your fiscal year end is different, you can just adjust these as needed. You'll see the very first deadline we've got here is the first estimated payment. It's due on January 15th. Now that's considered the fourth quarterly or estimated payment there. The first official quarterly estimated payment is due on April 15th. Of course, that's also tax day. Just keep in mind that's in your mind, it's the same as the federal tax return. Of course, if the 15th falls on a weekend or a holiday, it will be on the next day. That's the deadline to file and pay your F&E return, to file and pay for an extension, or to file and pay the $100 minimum. Middle of June, June 15th, is when the second quarterly estimated payment is due. September 15th is the third estimated payment. And then the deadline to file, if you have a valid extension, is on November 15th. That's 7 months after the filing deadline. And note, that is actually a new thing for us. That was based on legislation that just passed last year. Used to be a 6-month filing deadline, which put the extension deadline on October 15th. So you get just a little bit of extra time there, especially for all you accountants out there, a little bit more time after the big federal deadline, extension deadline on October 15th. One other thing to take note of here is this timeline does not take into account short period returns. Because the filing period of franchise and excise tax must coincide with the accounting period of the federal return, short period F&E tax returns must match the federal short period returns. They're filed for tax filing periods covered less than 12 months and include initial returns, final returns, and returns involving reorganizations of an entity. So those are short period returns. This timeline does not take those into consideration. Regarding delinquencies for F&E, penalty, failure to file, late filing and or payment, late filing or payment results in penalty fees computed at a rate of 5% per month. That maxes out at 25% of the tax due or assessed amount. And there's a minimum penalty, which is $15. That's regardless of the amount of tax due. Interest applies to any taxes not paid timely, even if there is a filing extension. All delinquent or deficient tax payments begin accruing interest from the date that they're delinquent or deficient until they are paid. Failure to file an F&E return or pay the required fees and taxes may result in the revocation of your business's charter. So it's real important that you stay up to date on F&E tax with filing or getting your extension. your quarterly payments. You don't want to end up in that boat of having your business's charter certificate revoked. All right, regarding terminating your franchise and excise tax, to properly terminate or withdraw your charter, you will file a final F&E tax return timely by the due date, or if not by the due date, make sure that all penalties and interest are paid as well. Submit a schedule of liquidation, distribution, or disposition of assets along with the final return. Pay all the taxes owed, and then obtain a tax clearance certificate from the Department of Revenue. You'll provide that tax clearance certificate along with the articles of dissolution to the Tennessee Secretary of State. All right, so now we're going to be getting into talking about minimum filing. This topic is fairly simple. In a nutshell, the minimum franchise excise tax is $100, and this is applicable to any taxpayer with a franchise liability that's equal to or less than $100. And that includes a taxpayer that is active but has no net worth or book value of real or tangible personal property owned or used in Tennessee, and no revenue. So if you've chartered with the Secretary of State and your business doesn't have any assets, no revenue, you're still liable for this minimum $100. It also includes a taxpayer that's inactive, has no net worth or no revenue, but that's had its charter or other registration forfeited, revoked, or suspended without having been properly dissolved or terminated. An out-of-state company, it also includes the out-of-state company incorporated in Tennessee, even if there's no property, payroll, or sales within Tennessee, they still have to file an apportionment Schedule N. That's important to note there. One other important thing to note is regarding proration, franchise tax will never be prorated below that $100 minimum. $100 is the minimum regardless. This is very simple. How to file the $100 minimum. If you were to go into your actual franchise and excise return and attempt to go through all the schedules just to file a minimum, it is very complicated. There's a way easier way to do it. You go to TNTAP, and without even logging into TNTAP, you will click on Returns and then View Return Links. Under the File a Return section, you'll see an option there. Click on Minimum $100 F&E Tax. And then the TNTAP website will just walk you through a few questions. You'll provide some information about your entity, account information, very simple yes, no questions there, and then pay the $100 minimum. It's very, very simple. All right, here, moving on to estimated payments. Who is liable for estimated payments? Taxpayers are required to make estimated tax payments when there's a combined F&E tax liability of $5,000 or more after credits for both the prior tax year and the current tax year. So if the prior period's return was for a period of less than 12 months, so a short period return, the actual liability from the prior short period has to be annualized. So under those circumstances, the taxpayer is required to make estimated tax payments if both the annualized liability for the prior year and the projected liability for the current year are $5,000 or more. So $5,000 for the prior and current, that's your threshold to keep in mind here for making estimated payments. So estimated payments, when they are due, we call them quarterly payments, but they're not quite on the quarter at every 3 months like you would think. But they're along the lines of the federal estimated payments. They're made according to this schedule that you'll see. As I said, the term quarterly is used only because there are 4 payments due, and the days between will vary just slightly. As I mentioned on the timeline at the beginning of this presentation, the very first payment is due on the 15th day of the 4th month of the current tax year. So if you're a calendar year, fiscal year in entity, your first payment is going to be due on April 15th. The second estimated payment is due on the 15th day of the 6th month, the third payment on the 15th day of the 9th month, and then the fourth payment is due actually on the 15th day of the 1st month. And of course, if any of those 15ths fall on a weekend or on a holiday, then it's going to be due on the next business day. Computing the estimated payments, you can compute estimated payments using one of two methods, either the standard method or the annualized income installment method. And we're going to break both of those down here in just a moment. It's important to note that you cannot switch between these methods throughout the tax year once you stick with either the standard or the annualized income installment. That is the method you'll have to use for all 4 of your estimated payments. There is a link here to how to get to a worksheet to calculate your estimated payments. Of course, you're not able to click on this link live from the PowerPoint, but when you pull up this webinar on our website later, you can click on that or follow this pathway, tn.gov/revenue, then click on taxes, F&E tax, forms, and then under the other heading, you'll see worksheets, and that's where you can find this worksheet to be able to compute your quarterly estimated tax payments. So the standard method, for the standard method, the amount of each quarterly installment is the same regardless of that quarter's actual revenue. The standard method computes the minimum quarterly payment amount as the lesser of either 25% of the prior year's total liability or 25% of 80% of the projected current year's liability. For the annualized income installment method, now this method, if you're a business that has income that's uneven throughout the year, maybe seasonal income, this is a good option for you. The election to use this alternative method is an annual election that's made on your franchise and excise tax return. So the components of the quarterly estimates for this annualized income installment method are computed separately. For excise, it's computed in accordance with Section 6655 of the IRS Code. And for franchise, it's the lesser of 25% of the franchise tax shown on the tax return for the preceding year. Of course, that's annualized if it's less than 12 months, or 25% of 80% of the current year's liability. We do have an important notice on this that I'm going to put into the chat real quick that will give you some information as well and detail more about the 2 different methods to compute estimated payments. Let's see here. All right. How to remit estimated payments. It is required that estimated payments are remitted electronically, either through your bank account or through IRS modernized e-file program. And there is penalty and interest that's applicable if you do not remit payments electronically unless you have a waiver. Accepted forms of payment can include ACH debit, ACH credit, and credit card. There is a service fee that's added for payments made by credit card, not debit card, but actual credit cards. Funds must be readily available. And important to note here that any taxpayer owing $2,500 or more in connection with the estimated payments have to remit tax payment to the state in funds that are immediately available to the state on the date that that estimated payment is made. The funds have to be immediately available. Real quick, one thing to note, currently the service fee for credit cards is 2.35%, and that rate is subject to change. How to remit estimated payments on TINTAP. Once you are logged into your TINTAP account, you'll click on franchise and excise tax and then make a payment. And within the payment screen, you'll see an option for payment type, and there are several options under the drop down under payment type, and you'll see estimated payment as one of the options there. It's very important that you choose the right payment type, and when we talk about extensions in a little while, same with extension payments, you'll need to make sure that you choose the correct type of payment that you're making. Delinquent and deficient estimated payments. So the penalty rate for delinquent or deficient estimated payments is 2% per month. Of course, that maxes out at $24 plus interest at the current rate, interest rate. Penalty and interest are computed from the due date of the installment date and calculated until the 15th day of the 4th month following the close of the taxable year. If the taxpayer has timely filed estimated tax payments for at least 2 years, but the estimated tax payments resulted in an underpayment of tax on which penalties and interest accrued, you can apply for a waiver of penalty. So in order to avoid incurring a deficiency penalty, a taxpayer must make timely quarterly estimated F&E tax payments for sure there. You don't want to incur penalties and interest for failing to do so. Moving on to extensions here, how to request an extension. To receive the 7-month extension, the taxpayer must have paid on or before the original due date an amount equal to or greater than 90% of the current period liability, or 100% of the previous period's liability, or $100 if the previous period does not exist. How to pay for an extension. The extension is automatic if the payment requirements for receiving an extension have been met. TINTAP has a drop-down box, same as with the estimated payments that I was showing you, in order to indicate what the payment is for. So you can indicate right there that it is an extension payment. There's actually not a place or need to formally request an extension other than just making that extension payment. So one important thing to note here, when you are filing your actual return on TINTAP, there's a question that says, have you filed for an extension? And if you have, it's important to answer that as yes. It just helps us line up all of our paperwork on the back end and make sure that we give you what you have requested. One other thing to note here, paper form F&E 173 is for taxpayers that meet an exception for filing electronically and that are able to submit a payment. You can submit a payment that way as well. Important information about extensions. The filing extension is not a payment extension. So if you go in to file for an extension, you must pay on the date that the return was due. It is only an extension to file the return late, not pay for the return late. So another thing important to note here is that if a taxpayer anticipates that it will be due a credit or refund of tax with the return for which it's requesting an extension, and that could be due to having made sufficient payments, the taxpayer does not need to file an extension application or make an extension payment. The extension will be automatically granted. So regarding deficient payments for extensions, any tax that is unpaid as of the original due date of the return will be assessed interest. So we've got an example here. Let's say you have opted to pay for 100% of the previous year's liability, which was $50,000, and you pay that by the regular due date. However, once you file the return, your actual liability ends up being a little more than that at $60,000. There will be interest calculated on the difference between what you filed the extension for and what your actual liability is. In this case, interest would be calculated on $10,000. So if a timely extension request is made but does not meet the extension payment requirements, or if the taxpayer does not file the return by the extended due date, penalties and interest will be calculated as though no extension has been granted. So it's very important if you pay for that extension that you don't let the extension deadline go by without remembering to actually file the return. Some resources here that I showed you earlier, how to get to our main page about franchise and excise tax. From our revenue homepage, you just click on taxes and then F&E. To get to our tax guide, you'll click on, from our main website, click on tax resources and the tax guides and franchise and excise. For Q&A and frequently asked questions, you can, from our main website, click on revenue help or go directly to our help site by going to www.revenue.support .tn.gov. And then under taxes, click on F&E. I showed you earlier under taxpayer education how to get to our previously recorded workshops, previously recorded webinars, and to our F&E tax workshop as well. All right, well, that wraps up the official presentation part of today's webinar. And now I'll hand things over to Billy and Danetta to go through some of the questions that we have gotten from you, both on your registration forms and in the chat here today.
Very good. Thank you very much, Katie. Nice job. Hey, so that was pretty easy, right, Katie? You know, franchise and excise
Relatively
is
so, yeah.
pretty easy. Danetta, what do you think? Is franchise and excise tax an easy tax?
The 100 minimum dollar tax return is a very easy tax return.
No, exactly. That's what we want to stress here for the folks that are online here too. And we hope we did a good job in the presentation of that. I think maybe that's one place we can start with some of the questions here too. And thanks for those folks that have popped in questions in the chat area, and also those of you that may have submitted some questions ahead of time when you registered too. Those are very much appreciated. So, you know, on the $100 minimum, that is the easy route, right, Danetta? I mean, you would agree with that, wouldn't you?
I do agree with that. You know, that 10-tab homepage or even our revenue homepage where you can access 10-tab. If you would just go to one of those two pages or platforms and look for filing for returns and then filing that minimum $100 tax return, because it doesn't ask all the questions that you would get if you were going to file the long FAE 170.
Right. And I think it's important too to know that not every taxpayer is going to qualify to file the $100 minimum, but if you, and Katie went through this in the material, which of course will be posted online either later today or tomorrow, you know, some of the criteria that you can use here, like for no activity in the state, and you just happen to have maybe an LLC registered here and you haven't quite spun up yet and got things going, that's a great opportunity to just file the $100 minimum return because it's so much easier to do so. But if you're really in business here and you're making income here, you may not qualify for just the $100 minimum return. So you can't just click on it and pay $100 and be done with it. So you have to kind of analyze that. So it's not necessarily an easy question.
That's so true. And where a lot of taxpayers do get confused about is what you were talking about. Their total tax liability may be that $100 minimum, but if their federal form has figures, net income and net worth, then that state return should mimic that federal return. So what we have is an apportionment schedule that will factor all of that out, but they do need to file that FAE 170 return.
Mm-hmm. Right. So yeah, this particular type of tax, well, it's funny that we say this tax is really two taxes, as Katie pointed out in her presentation there too. We sort of kind of keep it all as one because it's filed on one return. But you know, it's just important to know that you want to kind of do this the right way, and you want to reach out to us if you have questions and things like that. One of the interesting questions that a participant had today was about liability versus income. So the person that typed in the chat here, which I can't really see right now, but what I'm remembering is the person said, well, you know, if I made $10,000 in income, is that my liability? And I think that is not your liability. Would you agree with that, Danetta?
I do agree with that because, you know, there are also expenses that, go along with that. So, well, the total liability, your income, your net income, it nets against your liability. So if you're, say, for instance, you earned $10,000 in our state, but then you had expenses of $5,000, then that reduces your income to $5,000. So you would have to look at both what your earned income is minus your expenses for the excise tax portion.
Right. And then it's just the tax on that income and not the income. Right. Yeah, so that's important to know too. So yeah, there's a few things to think about on that too. One of the more important things I think, and we have a lot of people online today that are not in Tennessee, they just happen to be registered in our state. So we welcome you from across the US and also the world. We've had people that are registered across the globe today, so we appreciate you. But the thing to know is that we do have to look at what the liability is here in Tennessee relative to Nexus or your presence here. Now, Katie mentioned this in her presentation earlier that we do have our franchise and excise tax manual that we have access to the whole discussion about Nexus. And it's very important that you understand that you may have presence in our state, such as having property or payroll here, things of that nature. And an employee that works here can give Nexus as well, not only the franchise and excise tax, but some of our other taxes too. So it's really important that you nail that down and understand that and refer to the manuals because they have really good detailed information. And there's a whole chapter on Nexus, and you can find that on our tax resources part of our website and look up tax manuals, and you'll find the franchise and excise manual there.
And
I'm go
one
ahead,
more,
Danetta, please.
yeah, I'm going to interject there because, you know, that manual, like Katie said, it's substantial. So just if they would follow her path to get to the manual, if for Nexus sake, if you would look at page 42, when you get into that manual, you'll be able to determine whether or not that you meet that bright line presence if you're not physically located in the state of Tennessee. So page 42 of that manual will give that information.
Perfect, perfect. So yeah, and I appreciate what you said there, Danetta. That's a nice specific reference. One of the other questions that we had submitted earlier was about, is there an easy guide for beginners on how to get started in paying taxes? Well, I would say the answer to that is sort of what you've done today in attending some of our webinars and looking at some of the pre-recorded webinars that we have. We also are working towards getting a new business workshop up and going again. We used to do these in person, and of course, we had the COVID-19 virus that kind of stopped doing some of that stuff. But we're going to do this virtually later on this year, and we'll have these sessions every couple of months for new businesses. And we'll discuss briefly franchise and excise tax, but certainly sales tax, business tax, and some of the other main taxes. So we look forward to putting that together and having some pre-recorded information on our website about that as well. But the biggest thing, if you look at the resources that we shared with you earlier, the phone numbers, the email address, things of that nature, we're here for you. We are very proud that we have a good staff of people that answer questions literally all day long. Our emails, we try to get back with people and routinely get back with people within 2 hours once you send us that email. So we're very proud of that, and we continue to try to strive to even increase our customer service there too. But I do want to share with you, I think on the slide that Katie was showing, there was a phone number of 615-253-0600. That's our general call center. But we actually have a franchise and excise hotline number, which is slightly different, and is 615-253-0700. So replace the 6 with a 7, and you've got franchise and excise. We're here from 8 o'clock in the morning till 4:30 in the afternoon Central Time every business day. So we're more than happy to help you out on that too. So looking at a few more questions here, Danette, I don't know if do you have anything that you wanted to bring up yourself?
Just piggybacking off of what you were talking about as far as the easy, you know, they were asking about an easy guide or something like that.
Mm-hmm.
What I suggest when I'm talking with the taxpayer, and a lot of times we get these phone calls when they're at their deadline. If you would go ahead and create that 10-tap account, and then way before your filing period comes, go out there and just kind of maneuver around that system to get familiar with the system. That's your best tool. And then if you found that you come across some issues that you just can't seem to solve yourself, long before that filing date when you're not panicked, give us a call. Like Billy said, we have representatives available to assist you with all of that. They're really good. We've been at this thing since 2018 now. So we're pretty good at knowing where to look and how to assist you to get to the places that you need to be. So just, very important to know your due dates. Katie talked about that. No, that's the biggest thing to avoid penalty and interest is to know your dates. She gave you a timeline for the calendar. A fiscal is slightly off from that, but if you have a question about that, we'll be more than happy to give you those dates as well. Know when your original return is due and know when your extended return is due and put a trigger in place for that. If it's on your calendar phone, if it's on your computer, if it's somewhere you sit and look at it daily, that, the best thing to do is to have a trigger to know your dates and get those filed online and get familiar with this website. It's really user friendly. But if you're just getting in there on the day of, it can be, helter skelter.
Yeah, and along those lines too, Danetta, why don't we talk about payment warehousing for a second? How important is that?
It's very important. So some people schedule out, some people pay on the date of, but you do have the opportunity to schedule your payments out. You don't have to, you can do them one time for the entire filing period. Or, as I said before, some people are skeptical and really, about putting their monies out there a year in advance. But if it's due, it's due. So, yeah, warehousing is a great opportunity. That
I
way you
think
can
that's
forget
a
about it. You
great
can forget
thing I've
about
seen taxpayers do because, you know, and we those of us that have done this for a few decades have seen, taxpayers that, will because they're busy and people on this call today or in this webinar are busy people. But when you do get a moment, let's say it is 2, 3 weeks ahead of the due date, we could go ahead and go out there and calculate what you owe
it. Mhm.
and figure that out and then say, okay, I do not want to send this until the due date, which
Mhm.
would be April 15th for a lot of folks. Um, and that will come out on that date. And then you don't have to worry about it. That's another thing you can scratch off your to-do list.
I
I
like
think
that.
I think
And
it's
the
tremendous. It's a real advantage, and we really have had no problems with that sort of system. And that money does not come to us any earlier than you'd like it to come. So that way, I think it's an advantage for both parties, for you guys as taxpayers, and for us, with state government. So, Danetta, if you don't mind, would you talk about extensions as it relates to federal extension and just kind of reiterate what we were saying on that?
as far as filing the
Yes. And
extended,
what's required? What do we actually require versus what do we grant?
we actually require 90% of the current. And a lot of people say, well, how do I know 90% of the current? Well, remember, you're filing that extension on the due date. So you've had your whole filing period. So you pretty much know what 90% of it will be. Or some people like to play it safe and go 100%. Um, but just if you know your books or your CPA or your bookkeeper knows your dollar amounts, it's easy to file that 90% by the original due date of the return or the 100% of the previous tax year.
For the estimated payments. That's
Yes.
right. Yeah. So we will take a federal extension too, correct? Somebody files a
Oh, yeah, yeah, yeah. I'm sorry.
extension on their 1120 or
Mhm.
or or any of their other forms that they might be filing with the federal. We'll take that, won't we?
Oh, yes, we will. I'm sorry. Yes, we will. Yes, we will. Yes, we will.
Yeah. So we don't have necessarily a requirement for an extension filing. It's just the estimated payments which have to be made on the prescribed schedule. Right.
They have
Uh,
to be on the schedule. Right.
mhm.
Absolutely. But you do have to have, as Katie indicated, all payments have to be, funds have to be here by the original due date in order to obtain that extension. So we don't
Yes.
have to have the form. We can, yes, they can say that they elected that on their federal form and that will be honored. Yes. But
Yes.
the
That's
money,
great. Yeah, that saves a lot of stress for people as far as that goes too. I think one of the more interesting things in Katie's presentation too was the fact that, indicating on that 10 tap system what type of payment you're making. Is it an estimated payment? Is it just an account payment or a period payment? So be sure you're selecting the right type of payment when you do that. And one more real brief commercial for 10 tap. 10 tap, if you think about it, guys, is like online banking. Okay, a lot of you use online banking to access your business checking account, savings accounts, other types of accounts that you may have. We all have other types of financial things we do online these days. 10 tap is no different. So even if you're not filing a return or making a payment, it's great to go out on the 10 tap and to look at it occasionally and say, hey, look, there's something weird here that I don't get. Something strange is happening. I better contact somebody. I better send them an email or I better call them. And that's where we step in, okay? Because we'll hold your hand, we'll figure it out. Believe it or not, we might make a mistake. Oh, absolutely. I'm laughing because it happens at different times. And then when we see the mistake, we can see where it generated from and we can fix it for you, okay? Also on credits that you might have from previous periods, we want to maybe apply those to the next period for you. So that's something we can easily do, but we just need your direction and communication. So that's what we're after on that. Okay.
so on the return for the current year, there is an election at the bottom of the return. At the end of the return, they say that they want their money refunded or they want their money carried forward to the next year. And usually if they make that selection, the system will automatically do one or the other.
Okay. Very
Yeah.
good.
Yeah. There was also a question that Katie had shared with us, and I thought it was pretty important. There was someone asking about having no nexus in the state of Tennessee, but having an employee in the state of Tennessee. And are they required to register for franchise and excise tax? And that kind of goes back to what you were talking about, Billy, earlier about nexus and the bright line presence of. So yeah, if that employee earns $50,000 or more, or if that compensation is 25% of the total compensation of that company, then they need to register for the franchise and excise tax. Um, I hope that's clear. So if you have an employee, your company is not here, but your employee is situated here. That payroll, that what you pay that employee is 50,000 or more, then you need to register and pay franchise and excise tax.
Okay. Katie, you're trying to share something with us. What are you showing us?
She's showing us the bright line presence for economic nexus.
Okay. Yeah. And this is on our website under our frequently asked questions. So we have that as there in a real succinct form as well. So
Is the page showing up for you?
yes,
It
I
is.
can see
Okay.
it.
Okay,
hmm
good.
It's a little hard to read because it's so small, but well, folks can look that up a little bit later. But nevertheless, oh, thanks, Katie. You're like a magician there. Good for you. But
There you
but
go.
yeah, it's yeah, these taxes, if we all had a magic wand and could say, hey, it's just this easy. No, we're not here to tell you this stuff is easy, but we're here to tell you that number one, it may be easier than you think it is, but it definitely is easier for you to try to get some help. Okay. So we hope that today's presentation has been very helpful to you, not only from an informational standpoint, but as far as where to get information when you get to a situation that you don't understand too. So we obviously know that we can't answer everyone's questions today. We had a large number of participants, and we thank you very much for showing up. But we do want you to send us an email to revenue.support@tn.gov You can call this phone number, or don't forget the 0700 number. Either one, it's fine. And you'll get to somebody who can help you. And again, like Danetta said so wisely in just a few minutes ago, uh, do things early as you can. You know, get ahead of the game. Let us help you not get in a bind at the last moment, particularly as others are getting into a bind at the last moment, which tends to happen typically around April 15th. But again, when that happens, whenever that is, you just reach out to us and let us know. Katie and Danetta, do you have any final comments that you want to offer up?
If we have just a brief moment, I was just kind of scrolling through some of the easier questions.
Okay.
There was one from one of the participants that registered in November of 2021 and wanted to know when they needed, I think, let me see if I can find it again, Billy. I
Okay.
think their filing date, and if you're a calendar year, then you're going to have a short period return for 2021. So your filing period is going to be from that November date to that 12/31 date, and you will file it by the original due date, which is the following year on the 4/15 date. Okay.
Okay. That's right.
Um, yeah.
Just a real quick odd reminder: if the 15th falls on on a weekend or some sort of federal holiday or whatever, we extend that due date by whatever dates that might be, and that's for all of our different tax types as well.
Yeah.
Another question I've seen in the chat today and in the questions, several questions in your registration forms was, do we send a reminder or a bill out regarding the estimated payments or the regular return? And the answer to that is we do not send any
No.
reminders. What we, unfortunately, what you don't want to see is a letter from us saying that you failed to file or failed to pay. So we do send those, but we don't send anything in advance. Same as the
Right.
federal government.
And
Yeah.
the reason for that is we have no idea how to estimate what you're currently making in your business because we have nothing to base it on. So that's not even possible. You know, you could call us, like if you say, well, I'm going to pay 100% of what I owed last year, and you don't know what that is. Hey, you could call up Danetta and her team, and they can tell you, you know, as soon as they identify or as soon as you identify as the taxpayer, and we know we're talking to you, we can release that information to you and let you know that kind of thing. But yeah, that's an important thing too, Katie. I appreciate you saying that.
Yeah, and on that same, along those same lines, for all the business owners out there who pay a CPA or an accountant to file this return for them, I still want to recommend that you get a login to TinTap and have access to your franchise Excise account. Even if somebody else does the file and they just tell you how much you owe, it's a great thing to be able to, just like Billy was saying, like online banking, to give you an idea of what's going on with your franchise Excise account as the business owner, to have some ownership, no pun intended there, over your tax accounts. Even if you don't want to think much about them and just want to pay somebody to file them all for you, it's a good idea to have TinTap access and be able to see all of your tax accounts at a glance.
No question about it. And if you have any problems getting access to your account, you can't figure out how to do it, just call us or send us an email. Hey, I need help. We'll do it. We're glad to do
Right.
it. Okay. All right. Any final comments, ladies?
Lots of questions here about how can we view this later. We've mentioned it a couple times, but I'll reiterate, go to
Please.
tn.gov/revenue and click on taxpayer education. And either later today or tomorrow, the PowerPoint of this presentation, as well as this video, will be posted under the webinar video library.
Glad to do it. And let's not forget too, we have some upcoming webinars. One on business tax next month on the 29th. That's a very popular tax. We have loads and loads of people that file business tax, which is not the same as franchise and excise tax, by the way. And then one in April scheduled for professional privilege tax as well. So if you happen to be a certain profession, you might be subject to a $400 tax too. you may want to look that up and tune in if you need to, and we'll help you with that as well. So I guess with that, since we're coming up on the hour mark, or almost the hour mark, we'll go ahead and close out today and thank everybody for participating. And again, please submit your questions, comments, anything that we can do to help you. There's a survey as you exit that we hope you'll complete and give us your feedback on. And again, thanks again for attending. Katie and Danetta, thank you for your expertise.
Can I
And,
answer? Can I answer one more question? Because we get
please.
a lot through Zendesk, and we get this a lot on the phone. It's a panelist asking a Schedule C taxpayer who uses the Social Security number for businesses, and that's a single member LLC for federal purposes. For the state purpose, yes, you will file that FAE 170 return. If you're filing a Schedule C and you are in LLC, then yes, you will file that FAE 170 return.
Right, because you're an LLC.
Because you're
An
an LLC.
LLC is taxable. Right.
Right. And
Thank you
that
for
was
bringing that up,
also,
Danetta. That's a great point.
yeah, there was also a question that Katie had brought up about sole proprietorships are not required to file franchise and excise tax returns. I'm
Right.
just trying to get through a few of them. I know we have only 5 minutes left. It was a question about assets. I think I was trying to go back, and I know we're not getting into that deep stuff, but it was a simple question about, I think, what are assets? Or can you list what kind of assets are? Oh, no, we don't want to do that one.
Okay.
That's a rabbit hole.
And if you have accounts receivables, that could be an asset. If you have stocks, dividends, or that could be assets. So we'll leave that at that, though.
And our F&E manual details that in depth.
Yeah, yeah. Submit your questions, and we will definitely respond to that question.
Okay.
That's it, Billy and Katie.
All right. Thank you. Thank you, Danetta. Appreciate that very much. Okay, everybody. We hope you have a great day. Thanks for joining us, and we'll see you at another webinar soon. Take care,
Thank
everybody.
you.
Care.
Okay.
Bye-bye.
Bye-bye, everyone.
Bye-bye.